I've been trading for over 7 years, and every single day I come into the markets drawing at the same levels. These levels that I'm about to share with you today work on a consistent basis, and I've personally made over the $100K trading these levels. They're systematic, mechanical, and the best part of it is that it's reputable. So in today's video I'm gonna show you step by step exactly how to form a daily bias of those key levels so you guys can make money on a consistent basis. Welcome back, traders. If you're new here, make sure to hit the subscribe button and turn on notifications so you don't miss out more strategies like this one. Today we're focusing on a cornerstone of my trading approach, PDH and PDL, which can be said also as previous day highs and previous day lows. These are straightforward yet incredible powerful levels derived directly from the high and low prices of the previous trading day. In the crypto world where markets run 24/7, I typically base this on the New York session close on standardized on the UTC zone to keep things consistent. Adjust based on your time zone, but consistency is key. But first of all, why I use PDH and PDL for higher time frame setups? And it's easy because they provide a macro view of the market sentiment from the day before. I've said many times in this channel that everything, charts, prices, it's just a reflection of the people and the investor sentiments. So this is important and they act as reference points for today's action. Unlike lower time frame noise, these levels cut through the chaos and highlight where real institutional interest lies. The primary goal here is to spot either continuation, where price respects the breakout and pushes further, or rejection, where it bounces off these levels like a rubber band snapping back. First of all, let me paint a picture. Imagine liquidity as the fuel that drives price moves. Above the PDH, often there's a pool of sell stops from traders who went too long too early or buy orders waiting to be filled. Below the PDL, it's the opposite, buy stops from shorts getting squeezed. For example, if we go to Bitcoin, for example, and we come here, we set the 1 hour candle setup, we can make it here. For example, here I had some good examples. And we can see here, this was the PDH of 30 of July and this was the PDL of 30 of July. And we can see that these levels have been really important for us if we wanted to operate day trading here, because this PDH acted as the most important resistance before the price went down. And we can see here a clear example of how the PDH PDL strategy works. Let me clear that to make it easier for you to see. But it's easy. You can see here that the price made the PDH, here made the PDL, then came here, stamped on the resistance level. We tried to kill it 2 times, but it was not possible, so the price went down directly to the PDL. We broke that level, we retested that level, and we went down. So this was a really obvious trade if you were using that strategy. And I had this drawn because I recorded this video like 1 week ago, but I was outside my home. You can see that my setup obviously changed. So obviously this is the past, so we could be using this strategy for another moment. But you can see here how this shit worked. I mean, because those levels are clearly confluence levels. You can see here that the PDH had a wall of sell stops. Just take a look here. Smart money hands these liquidity pools to engineer moves, and by aligning with PDH and PDL, we position ourselves to ride those waves. This isn't guesswork. It's based on an observable market behavior that repeats across assets like Bitcoin, Ethereum, Solana, Hype, and even newer ones like I said in Hyperliquid. In this video, we'll cover the logic, scenarios, examples, and rules, and even live trades to make this your strategy. As you have said here when I showed you my screen, this was a perfect strategy. And we can repeat it every single day because this is based on the information of the day before. Obviously, if today it's actually 11 of August, the levels of the 30 of July are useless for us. So if we want to use this strategy for tomorrow, we should use the 10 of August levels, or maybe for tomorrow the 11 of August levels, so today. But let's go to the strategy. Alright, so let's get into the weeds and explain why this setup is so damn effective. At its core, the PDH and PDL zones are zones of liquidity because they mark the extremes of the previous day's battle between buyers and sellers. The PDH is where sellers overwhelm buyers, capping the upside. Think of it as a ceiling built from exhausted longs places their stops just above. Conversely, the PDL is the floor where buyers stepped in defending against further downside, with shorts placing stops below. But why does price react here so often? First of all, it's psychological anchoring. Traders worldwide draw the same lines, creating self-fulfilling prophecies. Everyone watching $70,000 as PDH on Bitcoin, orders clustered there. This is everything psychological. I've said many times and I'm not gonna get tired of saying it. The second is that institutional algorithms are programmed to target these levels of efficiency. They need liquidity to enter or exit large positions without slippage. In crypto, with its high volatility and lower liquidity compared to the forex or stock, these reactions are amplified. New events, whale dumps, or even Elon tweets can push price to sweep those zones before reversing or continuing, so it's so important to keep it in mind. This brings us to the two key ideas. First of all, that continuation moves happen when the price breaks the PDH or PDL and holds, often after retest. This signals that the breakout has conviction. The market absorbs the liquidity and is ready to trend. For example, if Bitcoin breaks the PDH at $100K and holds above, it's like the bull saying, okay, we are in control now, leading to a round toward higher heights. On the other hand, rejection moves are traps for the unwary. Price might poke above the PDH to sweep stops, luring in breakout chasers, only to reject and dive back into the range and go all the way down. This is classic manipulation, engineered moves to grab liquidity before the real direction reveals itself. In reversals, you'll see weak candles, volume spikes, or divergences on the indicators like RSI. I've said that I don't use many indicators, but RSI is one of my favorites. The beauty here is that these aren't random, they're mechanical patterns that you can anticipate daily. Over my 7 years trading, I've seen this played out 1,000 times, turning potential losses into consistent wins by waiting for confirmations. And I think that this is one of the bases and one of the key things you should learn, especially if you're gonna get profitable on trading, is that you have to be consistent and be patient, okay? Especially because in markets like crypto, the manipulations are every single day. They are all the trying to make you think that the price is gonna get one direction, but then it goes to the other one and you lose everything. This is classic here and you have to get used to, because otherwise you're gonna get out of money. So to trade this scenario profitably, you need a clear framework for how price behaves around the PDH PDL. I've broken it down into two categories based on the open, inside or outside the previous day's range. This helps you form your daily bias quickly: bullish above the PDH, bearish below the PDL, or neutral inside until a break. The first scenario is inside the previous day's range. This is the most common. Price open between the PDH and PDL, indicating indecision or consolidation from overnight action. For example, here on this scenario I shown you before, you can see that the PDH was on 30th of July in $118 per Bitcoin, 18K obviously, and the PDL was $115K, and we had the open on, for example, the 117, so it was literally the midpoint on the range. Okay, we were exactly here. Let me just make, this was more or less the range we were acting. Okay, so as you can see here, this is the most common situation. You have 2 points, you have these key levels, and you have the open on the middle point. So what we do here, so in this specific situation, we have the first scenario where the PDH PDL has a rejection, has a sweep and reverse. Price drifts up to test the PDH and sweeps just above to collect liquidity. Here you can see the spikes to collect the liquidity, and then rejects with a strong bearish candle that sets up a short back toward the PDL on or the range midpoint, or vice versa. We can see this situation on the opposite direction. Sweep below, reject up for a long, and the key thing here is that we have seen high volume, take a look here and take a look here, followed by immediate selling pressure, common in ranging markets or after big news digestion. We can see here that it was on a ranging market, and it's easy. You can see that the price opened here, went directly to the PDH. We saw here two spikes to catch the liquidity that was here, and we saw a strong bearish candle that went all the way down to the PDL of the previous day. We saw that it broke that zone with a lot of strength. We had this spike here. We had a retest on the PDL of the previous day to continue going down, okay? And if we were using that strategy, it was an easy trade for us, because we see that the price goes here. We don't open the trade here because we need a confirmation. We see that the price stops here, and you see 1, 2, and 3 times. And here when we see this candle, exactly this one, this is the moment where we have to open the short, and our take profit should be on the PDL or even a little bit higher, because we want to make sure that we take this, because we have to make sure that it takes take profit. And obviously our stop loss should be a little bit more up, like we can see here. We could adjust it like more or less like this. This is a perfect trade and a perfect scenario on how we could use the PDH PDL strategy. And the second scenario, we can see it here, but first of all, let's wait, is the break and retest of PDH PDL. Price builds a momentum inside the range, breaks the PDH or PDL cleanly on increasing volume, and then pull back to retest the level as new support. And if it holds, you can go long or short for a continuation. This is gold in trending markets. Think Bitcoin in a bull run, breaking PDH and running to all-time hikes. Watch for the retest, not to wake up too deep. A shallow pullback shows a strength. We can see this scenario on a bearish situation just right here. Just take a look. This, let me put the 15-minute candle. Just take a look here. We can see that the price direction was bearish, but we had a retest. Okay, we see that the price retested the PDL. You can see that it broke, had a retest, and then continued going down. We can also see that here we had another retest, but we had here a 3.42% trade that obviously with the leverage could be much more. But this is a perfect scenario and perfect example on how to use that strategy. And Bitcoin has been doing this a lot of times in the past, okay? Just take a look on how it does. For example, let me put the daily candles. Let me put it better for you to know. One sec. Okay, just take a look how Bitcoin does it. Okay, Bitcoin, for example, comes here. Take a look here. Bitcoin on 2024 goes up. You see that it sees a new high. We broke that level. We come back to the level. We retest and we go up again. This is a common situation on Bitcoin. It happens almost every time. Look at here. Goes up, retest, go up. Here we go up, we retest on a longer time zone, and we go up again. And here again. I mean, it's really useful. I'm just showing you the macro, okay, because Bitcoin is doing it every time, but obviously we should operate this on a daily bias trading. But just for you to know that you can make your analysis here. Then we have the second situation. It's outside the previous day's range. It's rather but higher conviction, often from overnight gaps due to the global crypto news. We have to keep in mind that in crypto the markets are open 24/7. It's a little bit difficult for you to identify this outside previous range. But as I said, we're gonna use the New York session to make it the reference and to make it easy for you to understand, okay? So for example, let's say that we open with a pre-market breakout and we have a continuation retest, and the price has already broken out pre-market, say above the PDH on Asian session volume, and at open it retests the level. If it holds a support with buyers stepping in, you should look for volume clusters. It's a strong continuation signal and you should enter long here, targeting measured moves like the range width added to the breakout. This is a perfect for momentum plays in coins like Solana during alt season. And then we have my favorite, the scenario 4. This is the reversal. This is a fake breakout and collapse back into the range. The trap setup, price gaps above the PDH pre-open. Remember, keep in mind the London or New York session. Drawing in longs but fails to hold. Sellers flooding, pushing it back to below. This fake out often leads to a full reversal toward the PDL or even beyond. The signs here are weak volume on the breakout, immediate rejection candles, and I've lost a lot of money ignoring this early in my career, so now I wait for confirmation to avoid the chop. We can see it here many times, especially in Bitcoin. This is a classic manipulation as well, where we can see the price seems that it's gonna be going up, but you see, look, for example here on a long term, you see that price seems that it's gonna be breaking new hikes, but it goes all the way down, and you can see that the reversal was really big. Obviously, you should remember that these scenarios are not isolated. Layered in higher time frame trends, like if weekly bullish favor a PDH breaks over rejections. But it's time to visualize it. We have seen the Bitcoin chart, but now we are gonna see it on the Ethereum, Solana, and we are gonna be drawing the PDH, PDL levels on live, okay? So time to visualize it, nothing beats seeing it on charts. So let me show you my screen. Okay, so we are on Ethereum today, 11th of August. So how could I use these levels to make my trading? Let's get into the screen. PDH, and we have the PDL. Let's clone it. We put it here. PDL. We have to identify those zones. Let me put the brush here. We have the PDL here, and the PDH was exactly here. Okay, so we have that today's session. It's opening on mid of range. We did a few higher hikes than the previous day. We saw that Ethereum touched today $4,352. So we see that we have seen more or less the same pattern we saw on the last chart I show you on Bitcoin. We see that the price went all the way up, and now the price went back, and we are in the middle of a range. We are more or less on the middle of this channel here. Okay, so what I do here, first of all, my first movement, it's taking a look at the trend. Okay, we can see that the trend, it's clearly bullish. Okay, we see that this low, it's a higher low than in this one, then this one, then this one, and this hike, it's also higher hike than this one. So we can see that the trend, it's bullish. So if the trend is bullish, opening a short, it's complicated and often a bad decision, because if the trend is bullish, be careful. Especially we have many signals that those things are complicated. Just take a look at here. This candle, which was the open of the session, was followed by a big spike on the volume. We can see here that the spike here was really high. So when we see this kind of spikes followed by this amount of volume, this means that the chart is really bullish. So what I'm looking here, so my movement here would be really easy. Here maybe I would open a long, especially regarding that we are maybe going to this zone here, and we're going to take the liquidity to make new hikes. Okay, we have seen a rejection here, and the price is going down to the PDL. But regarding the trend, actually, I don't think the price is gonna break it down. So my movement here could be like waiting to see what the price does. If the price goes down, retest the zone and retest it here. Here I open a short, okay? But if the price stops here on the PDL, goes up and retest, here I open a long, okay? That could be my scenario. We could see this would be like the price going, retesting and opening a new long to search for new highs, or retesting to go back again, okay? That would be my decision. So for now, I'm not operating, I'm not doing anything. I wait for confirmations, because if here I open a long, I might lose money, or maybe I might lose a good moment for acting, especially because if the price goes below the PDL, the trending is changing because you're doing a lower low, so maybe the trending it's gonna be shifted. Especially if we take a look here on the RSI, we see also that we have a divergence, okay? So here I would be careful. I would wait for confirmations, but these are the two scenarios I would be operating, okay? A reversal on the trend, or maybe a continuation. That could be going to the PDL, bouncing, retesting, and up again. If the market trend is that clear, that we see that everything is bullish, everything is going up, we cannot be like operating without confirmations, because we're gonna lose a lot of money. So this example shows the repeatability of this strategy. Focus on clean reactions, no forcing trades, okay? Here on Ethereum, it was a bit complicated because we see that the price might be reversing, but we see also that the trending is bullish. So I'm not gonna be forcing the short, because maybe the trend is so important and we shouldn't be operating counter the trade. And this is important. Be careful operating when the trending is bullish or bearish against the trending, because the trending, it's the most important thing you should be looking when you trade something. So now that you see how you should be applying this strategy, let me tell you some rules for trading the PDH and PDL. The first of all is that success comes from discipline. So let's codify some rules. First, prioritize opening place only when price open outside the range. That gap gives instant bias and momentum edge. Why? Inside opens often lead to a chop as the market digests. Outside means conviction from overnight flows. If it opens inside, patience is key. Wait at least 30 minutes post-open to let structure develop. In that window, mark the opening range, high-low of first 15-30 minutes. It adds confluence. Jumping in early is a rookie mistake. I've blown accounts doing that, so please be careful. Let price show if it's respecting the PDH PDL zones or building for a break. So if you don't have to operate one day, don't operate, okay? And it's crucial, never marry a bias. Your pre-market plan might be bullish, but if rejects the PDH, flip short without ego. The market always right. Responding to price action keeps you alive long term. The common pitfall is holding losers, hoping for reversal, cut and reverse instead. Stay mechanical with if-then statements. If price sweeps and rejects below the PDL, go short. Stop above sweep. If it breaks the PDH and retest hold, go long. Target range extension. If it breaks back below the PDH after long, exit and consider a short. Write this in your journal. They remove emotion, turning trading into a flowchart. Add risk rules, maximum for example 1% per trade, no more than 3 open at once. In crypto's volatility, this preserves capital for the big moves. So you already know the strategy, but what about you? It's not the entries or indicators that blow accounts. It's fear, it's greed, it's hesitation. I've seen it over and over again. Traders with solid systems still fail because their mindset isn't built for the game. That's why I made a dedicated video breaking down the mental side of trading, the real edge behind consistency. If you ever sabotaged your own trades, this video is for you. Watch it now before the market humbles you again. So thank you so much for watching this video. I'm Jos and I'm waiting you in my channel. Thank you and happy all-time high and all season for everyone, because finally it seems that we're gonna see the market pumping again. So make sure you follow this channel.